because it's a really good subject. And I put it first, economic impact, because I think it's important so we have a broad view of everything, economic and political and social, especially economic and social is important, because we have now a collapse of economic activities in all countries. European economy will face a substantial financial effort to sustain the countries of the Southern Europe, including Portugal. We will suffer tremendous rates of unemployment, deficit, and public debt, like in the other countries. And the magnitude is really generating change in the economy, our behaviors, our companies, and our way of understanding politics and society. And there are some of them. The major risk for the European economy is really deflation. One of the countries that will gain with all of this, it will be Germany, of course, because they will seize this great opportunity to tackle the situation. With a pan-European vision, they will take the lead, as usual, and help with strong public spending, mutualization of debts, and authorization of liquidity injections, so that the architecture of the Union can reverse its decline. And the first conclusion that we can act for that is that Europe will be more united after this crisis. Okay. So again, during economic impact, also the three large blocks will be consolidated in the world, like we see, China, United States, and Europe. The fear of further breaks with supply chains after the trade war and COVID-19 will act as a catalyst, because we enter in 2020 with 31% of the assembly and 64% of the companies in technology sector worldwide made in China. So as you can see, we are dependent of China. But as a result of this crisis, Europe and the United States will transfer some of the manufacturing to their regions. That's the good, positive impact that we have. And there will be also a decoupling the supply chains that will end the Chinese economic miracle, and their growth will stabilize in around 3-4% of GDP. Like I said, one of the things that we saw this week during this study is, for instance, the Central Bank of Ireland estimates that GDP will fall by 11% in 2020, as the other countries, and unemployment will be larger. In Portugal, the GDP may reach 5.7%. Exports and goods and services should fall 19%. That's a great impact, and it will be investment will fall also 40%, and private consumption, one of the largest components of GDP, will shrink by 8%. This estimate from Bank of Portugal forecast, and the Central Statistics Office from Ireland. So as we can see, there will be a great impact, a bigger impact on GDP in every country. The private equity will redirect its investments towards health, food, and technology-related companies, and the shared economy will lose strength. The social impact, on the other hand, I think is more positive, because we have to take positive feedbacks from this old situation. Like Pedro and Susan has told us the other day, less office space will be rented and the price of rent will go down. And we have to worry about the way the professionals have become accustomed to customer communication, conference calls, and remote work with flexible schedules will grow, as we can see today. Citizens will have learned to consume less. Let's hope that. Online shopping will become natural in a new, more digital society. So flexibility is the new buzzword, because we are now, we can choose where we can work, and companies are taking, will be obliged to take great steps in this path. We investors will bet on companies that generate profits, of course, and many of the unicorns will deflate and go bankrupt. But at the same time, new startups will emerge because the unemployment and all the factors included in the people will understand that they don't depend anymore from their jobs. They have to create new ways of earning, especially because of unemployment. After the COVID-19, Europe is starting to invest heavily to rebuild its industry capabilities in such sectors as health, COVID-19 related industries. And we see in Portugal, for instance, there are many incentives from Compete 2020, Portugal 2020 for building and starting new companies and factories with COVID-19 related, as alcohol, as masks and everything like we see today. And pharmaceuticals also, especially the request vaccine. Food and technology will be also the state of the art. And there will be a redesign of industrial production between European countries, but with critical sectors to be autosufficient country by country, like food and energy. I think they will be the next next step. Proximity suppliers will be sought and just-in-time supply models will be renounced. Let's see. And companies with strong balance sheets and multi-channel distribution will have the advantage, of course, of the distress of competitors to thrive, intense business concentration, and become regional champions. Investors will invest in these companies, boosting their market capitalization. And that's the reality. Less space. Okay, sorry. After the COVID, many investors are still waiting to see how governments and regional identities like you will act and under which terms. This will have an impact of the cost of money and availability of the markets, structural funds, banking incentives to the private sector supported by governments. That will redefine how private investors position themselves. So the new economic models can follow two paths, a more socialist or more capitalist approach. Investors are looking and evaluating these possibilities and how to position one another. And I think it's not only the investors, but all that are entrepreneurs and are in all areas. And so how did we position ourselves in this uncertainty, especially our company? So we present our contribution to the future. For the moment, we established an exclusive partnership for Portugal with an investment fund and project financing company based in Europe that allows to have a comprehensive and competitive capital offer to investments in private projects from 2 million to 150 million as key target, however, also flexible to discuss transactions up to 3 billion. That is happening now. So the different investment programs can advance up to 100% of net capital for the project in the form of a loan against equity participation. So we are able to facilitate and offer debt, equity, mezzanine, or a mix of funding solutions, including the refinancing of existing loans, purchase of existing facilities, restructures, and so on. So present contribution also. The preferred investment sectors and industries right now are alternative and renewable energy, real estate and construction, infrastructure, minerals and mining, casinos and marinas, agriculture and related industries, environment, technical innovations, with restrictions. Now, oil and gas, as all you know, oil and gas is in evaluation and out of scope for the moment until further notice, because things can change soon, we hope. Tourism, hospitality, resorts, and aviation are now out of scope. So we make a chronogram for the investment, how it works. I think it's very easy to understand. for all, because as you can see, we have the project company, and they start with, do you have a feasibility study and business plan? If you have it, okay, you can move on. If you don't have it, we have to make the elaboration, and we can help with that. We can also review if you have the business plan and feasibility, with free of charge, of course, and management fund accepts and go for this. They will say no or yes. If no, of course, it's the end of process, and yes, they will continue the process. Management funds receives term sheets. The project company accepts the term sheets, the agreement, the project company investor. They know the investor, they do the due diligence, and now there's a way, that's the way that they say, okay, go or no go. If they say go, you have the SPV, the special proposed vehicle, which acquires 35% of the project company and receives the remaining 65% as guarantee. They have a transfer of funds, and the investors live in maturity, meaning the project company pay back the loan, bought back the 35 equity and market value, and recover the 65% guarantee. That's the way it works in of course, manner. So the minimum capital contribution transaction costs, as you can see, it's 5% of transaction costs with a minimum of these values for 12 for a project between 2 million and almost 8 million. The most important thing is that starts in 2 million. That, as you can see, all the numbers. So we can have 5% from 50 millions. The investments, venture capital equity, the investor asks for 35 of the project company equity with a pledge of additional 65% to the SVP as security, as we saw on the other slide. The maturity is up to 10 years. Anticipated exit, yes, no penalties. Sorry?
Start work early because he's going shopping with Sasha, and this is his last school day before.
Interest rate. No interest rate applied or additional cash contribution is necessary. The grace period will be agreed between the applicant and investor, and such period will be the period before the commencement of the loan and repayment. The materialization between 12 and 4 weeks on average. That's the medium. So rules and values, I think, is the most important thing. The exit of investor by maturity of the loan. So you have the exit investor in the fair market value of the project company. The market value will be arranged through an auditor upon disagreement. Both parties will assign own auditors, and the average price will be considered. Anticipated exit request. Of course, the client's allowed to exit the lender before the maturity with no penalty, and that's I think it's a very good plus. The project audits and project management will be carried out by the investor or by one audit and management first to be appointed by the investor. The purpose really is to ensure that the loan funds are disbursed and directed in accordance with the pre-approved project cash flow in the business plan. So the most another important thing is the governance, absolutely, because the investor requires an equal number of the seats on the PC board of directors, plus the casting vote until its unreturned capital contribution account has been reduced to 0 and not less than 50% of the seats for the duration of the investor's holding of shares in the PC. The fund management firm will be assigned as an independent director in the client's project company. So, in conclusion, there is available capital to rebuild as fast as possible the economic activities. So the investments that we have can be really a good way for investing in Portugal, investing in several areas. We have now a case, extraordinary case in tourism, but it's exceptional. It was accepted by the fund. and they are in the second phase of the investment. That's good. And there are also three. We are waiting for some investments that are being taken care of. Now, in this middle of the crisis, I think it's a plus, it's advantage. So, as I said, capital available from EU, structural funds, banks with our government support. We have in Portugal other investments that are made by the government, like compared to 2020, Portugal 2020 continued to have financing with a small and shred timeline, because it's in 20 we have to get a project till 20 May. It's extraordinarily short, but they are happening. They are happening now, so we have to be aware of the timelines. The venture capital from private investors seizing the investment opportunities are now available. And we can say that the new economic world, with the same difference in scope opportunities, the new normal, as everyone is talking about and writing about, consultants like McKinsey, Bain & Company, they are making all the articles about this new normal, the new buzzword, because it's our new normal in every aspect of our lives. So it's up to us to guide, promote, and be available to assume these new responsibilities and share knowledge and the best ways to build a new future. And that's the main case. So thank you everyone. So
thank you, Fatima.
Thank you.
I don't know if there is any question.
Yes.
Or shall I start as usual with one question?
And Louise also can answer.
Not. Well, okay, maybe I'll start then. Yeah.
Hi there. I'm Bert. My network here is a bit slow and catching up with you. Just a quick question for you, Fatima. You mentioned earlier on about investors were better on companies that generate profit. What did they do any bet for the startup, or do you have to wait for a startup to be 2 years in operational before they make?
No, we don't have to wait. No. Do you want to answer also? Yes, we also sent in. Waiting.
Not necessarily. They can also bet on startups. The key aspects of, at least not only of these funds that we represent, but the same thing is happening with the funds available through government support and European support, like in Portugal here, like Compet 2020 and PT 2020. You can apply for a fund based on feasibility study and the business plan. If they are reliable and if they are supported with good data and good projections, they will invest. Eventually, there will be a small premium for the risk if it is something a little bit out of the box. But yes, there will be investment even for ideas. I think I answered your question, Arnold.
Just a curiosity when it came around that, sorry, it's just a curiosity that came around that earlier on, but I didn't want to disturb Fatima when she was in the flow, so I just took the opportunity to ask the question now.
Okay.
I didn't get that. Did
I
you
didn't get it.
No,
Sorry.
Can you repeat, Gerard?
Yes.
Yes, sorry, we cannot hear you. Maybe write it on the chat. Anybody else? Pedro, you're unmuted. No.
I just have a quick question, actually, which is that I didn't hear anything. I heard a lot about alternative energy and stuff there, and I just wondered if you looked at anything specifically to do with the hydrogen economy. I know it's currently booming in Northern Europe, particularly Germany and the Netherlands, and I'm just wondering if that factored into your study at all.
Yes, we saw some studies. They are all, according with the sustainable impact studies and projects that we have now with the Agenda 2020 of the United Nations. Also, they have projects online. We see some investments, and I talked with Pedro about that. So we have several investments in energy, but it's for the moment we don't. I don't think we have nothing about it.
Yeah, and Finbar also, when industrial projects, main industrial projects, one of the key factors for European funds and government funds to be available is you need to demonstrate energy efficiency.
Sorry, you need to demonstrate what? Could you repeat that?
Energy efficiency. Need to do the okay. It's we need to. You need to. It's one of the key criteria for approval of of access to European funds is for you to have to demonstrate energy efficiency. So you need to set up some options. If you are using, for example, for some machine, 1 kilowatt hour to feed them, you cannot take all of that just from the grid. You need to have other alternatives set up. Even if you're still consuming it, you need to have options to redirect energy from your own production to the grid again. So that's mandatory right now.
Okay, so it's being kind of built into the finances of that investment vehicle then.
Yeah, there are 3 main for the funds now. There are 3 for the European supported funds up to now. We don't know if I'm going to change or not. There are 3 main criteria. It's the innovation, being product, process, or marketing. Circular economy. You need to demonstrate they are increasing reducing the ecological footprint because you are doing more economic circular economy, and you need more energy efficient. Yes, you need to be at least in one of these criteria, ideally in 2.
Okay, thanks. I actually have to drop off because I have another call now, but thank you very much. It's really interesting.
Okay,
Thank you, feedback.
Thank you.
Yeah, that was a little bit my question as well. You know, there is a lot of things which has been talked and written about how the restart of the economy should be different. There was an article in the FT yesterday. They were asking, can companies still afford to care about sustainability? Because everybody is keen to go back to do some business, and probably the sustainability and the green economy might suffer from that. But on the other hand, other people are saying maybe the coronavirus crisis could spur a green recovery. So I was wondering, in your investment funds, do you see there will be changes, or it will be back to how it was before the crisis?
No, I think that they will continue to invest in those areas, especially now with the corona. I don't think they have small issues with that, because the way you present the investment, the project, it will be accepted, because if he's connected to the sustainability issue, is you have everything going correctly with the due diligence and everything they need, and if it's a good project, they will continue and they will approve it. So it's not about the sustainability; it's about the project itself. I think every project in every area, except, like I said, tourism, it will be only exceptions they will accept now. So we have now one in the center of the country that is an exception, and it's a really, really good exception, and they approve it. So because they are worried about sustainability, they are going forward because it's like a project that has been it's very important for the country. So they wanted to restore it like with their speciality in the project itself. So they are willing to go for it, and then that's a good plus, because it's not about the green and the sustainability, it's everything involved, and the project itself. So it is well presented, it will be okay. So that's the way we see it. It's, yeah, sustainable.
Yeah, just to add something, I think in this phase everybody that is investing has some doubts and has to find a way to invest, to find new ways to invest. Probably sustainability can have a boost, or for the other hand, as Arnold is saying, it can the impact of the coronavirus and the lack of investment, if you will, can reduce the impact, the problem of sustainability as not an issue for now. I believe it will be a boost. I believe people will be very concerned about sustainability, about health systems, and about globalization. One of the things that I noticed on your presentation, Fatima, is that you are considering, as everybody is considering, that global economy as we know it probably will change. And that can be a big change, and that is what I'm most afraid of, because if that goes that way, then we probably have a longer period for recovery, because governments will try to invest money on their own countries for now, but if they will start protecting themselves, everybody will lose, especially us, because we are very small. And so it can go either way, but I really believe that sustainability and health and of course local economies will have a boost. I just hope, as everybody, that globalization did not be suffering as much as people are concerning.
Yes, I agree with you.
Pedro, I agree with you, but I also shared this concern with you regarding globalization, because not only we've been following up what's going on and the doubts and questions that everybody was posing, mainly more or less from the middle of the Italian crisis. What now? And in fact, it's not public. It's not fully public now. But the three main economical blocks in the world are looking inside. Europe are looking inside as a continent. Yeah, this is good for us, because if you are looking just from Portugal as a very small country, well, we will be dead meat. Simple as that. But because we are inside a major region like Europe, eventually the things will be different. Let's hope so. I believe I'm not being optimistic, thinking about it, that Germany.
But just be realistic. You should be realistic, because we also have a political problem in the world. We have a couple of leaders that are very populist, and Trump is one of them. He needs to win the election, so he's closing and sending an enemy to the public. This is China.
But
that
is going to happen. That is going to happen. Europe is going to not fully close its borders, but is going to start to look inside. We cannot be dependent as we were from the supply chain line, the global supply chain line. As we speak, until now, 80% of the technological production is in China. Everything stops. When China closes its borders, everything stops. 65% of components production, it's in China. there were lots of industries that stopped in Europe, in the United States, and all over the world because China was closed. This is the main issue. The main issue is the supply chain line. That's why they are starting to reinvent industry. Definitely will be globalization will carry on, but in different ways, without as many as big as important as it was until now. It will be a different way. But the United States is closing its borders. Eventually they'll follow a McCarthy way of doing things. Trump is from McCarthy school, so it doesn't surprise me. The Americans for America for Americans, and something like that. What we look in the last week and a half, just from Europe, they raised 15 new financing projects based in European funds. 15. So it's crazy with 1 month deadlines to fulfill. So everybody that is doing something like this is running like rabbits trying to do it. But then we cannot forget about raw materials. We don't have raw materials. They are still in South America. They are still in Africa, and mainly in India in Asia, and that's what will keep on the globalization routes open, I think.
All the countries that like OPEC will be in a bad situation right now because they will be the most disadvantaged about raw materials, like we said, in oil and gas and aviation problems and everything. So I think Europe will be more united, and that's good for us because Europe will start to take policies. Yes, take policies for
Let's hope so.
For investment.
So.
Yes. Because we saw in Portugal last week, we saw companies that were in tourism, they suddenly start to change and they say, okay, let's move on, and we have to make alcohol, we'll make a factory for it. Let's see if we have incentives, if we have everything. They have it. So like we said, they are projecting, they are making everything concentrating in health issues, like masks, like we see, everyone is now putting masks on market, masks, alcohol, and everything connected to healthcare. So it's connected with COVID. That's good because governments are paying for that. So it's a change. We have a small change, but we have to react, and we have to continue to build the tourism, to construct, to do everything that's it's not going to stop because it's slowing down, but it will be business as usual. I think on the meantime, the things will go slower, but they don't stop. That's the reality. So we have to keep countries moving. Don't you think, Pedro?
Big question.
Yes. Big question.
But Fatima, your investment funds, who are your investors? Where are they from? And could you tell us maybe 1 or 2 projects that they are working on or that you are working on?
Yes. The investors are a group of investors. They are European, they are in London and Switzerland. They also have a branch in the States, and they are now investing in the projects like they told us. The big one was before COVID. It was connected to oil and gas, and the other one was aviation, a company that was starting, so they have to stop. They have to stop it. And now in Portugal, we have this one that is really a big project. So the second phase, it's in continue now for restoring a big. It's not a hotel; it's a thermal, because it's very like it's patrimony, it's heritage. It's heritage building, it's heritage place, and it's well known. So they want to restore it, and it's they see, okay, let's make this exception, and that's the investment. They have also investments before COVID. They were investing in a large sums of money. Like we said, it's not 2 million, it's not 50 million. They have a big project. Sorry?
In Portugal?
No, in other in other countries, because in Portugal we are the only ones with the funds. They are starting now in Portugal. They start last year in Portugal, because they were in Europe and they were in all over the world. That's it. So the logistical center of Portugal, it's us. So we are now investing, and we are now getting.
No, we're not investing.
No, we are not. They are investing, of course. No, we are now getting some investments. They are. We have now for 3 investments that are online, so they are seeing if it's feasible or not. So let's see. During COVID, so that's amazing. A big project. Let's see how it works, because that's the way investors want to invest, and they have, in crisis, they have opportunities, and they have, if someone has 35% of the initial, 5% of the fund, that they will invest. So it's feasible that they will really invest. That's the good part. Yes.
Let me add here, Arnold, just a little bit.
Sorry.
One thing, the first thing they told us is, let's not stop when everybody stopped due to the crisis. They told us, we asked what we are going to do. Don't stop. Whatever you have in hands, it's not much. Let's evaluate. Let's keep on with the feasibility analysis and the business plan. Eventually, we will need to review terms and conditions of the investors' participation in the project, because we still don't know now what will be the cost of the money. Because if Europe, and let's think only about Europe and Portugal inside Europe. If the European Union will inject billions of euros in the economy, as we are expecting to happen, this means that we'll have, from one side, inflation, but we also have the cost of money will be very, very, very cheap. What it means is that the interest for the investors could be less. But because we are looking always at the mid-term, at least mid-term, 10 years investments, it's what interests them. It's not. It's a mid-term investment. So, considering this, eventually the terms and the participations will be adjusted to this new financial reality. Okay, but it will carry on. So we never stopped. As Fatima was saying, it's a premium and unique setup in the Iberian Peninsula. There's no place like that in the Iberian Peninsula. Although it's tourism, you see, and they said to us, stop investing in tourism, but you are telling about investing in hotels and lodges and in the cities. Now, now even 5-star hotels will be very cheap, so it makes no sense to invest here in Lisbon or Porto. But in premium areas with unique equipment, yes. So there's exceptions. There's exceptions even in the non-investment area. And one of the things that we start last week to evaluate, to start the pre-evaluation of the feasibility study, is a new logistic hub in the center of the country. There are a few. If you go in the highway from Lisbon to Porto, you pass through a couple of them, but there's a different approach. It's not just a logistic hub. It will be a logistic complex with other services available, and they are interested. So we are looking at the 10-year project again. So this is the beauty of it. We never stopped. Let's review the terms and conditions case by case and adjust them as we also are getting information of how things are going to happen regarding the injection of money from governments and European Union and other entities. But if the projects are interesting and if we can see feasibility, operational, and of course profit in it,
yeah,
they will do it.
Yeah, yeah, of course, yeah. It has to be in the medium long term.
Yeah.
Okay. Any more question? Elder? No, not today.
Sorry.
Okay. Right. Okay, so I think you have a new website as well, Fatima and Luis. So
Yes,
I guess
we have changed our website also.
okay, so
So
we can find a
it's
lot of
important.
information there. Yeah.
Yes, of course.
Okay.
So thank you
All
very
right,
much.
so if nobody else wants to say something, no? Okay, we'll conclude here and
thank you.
have all a nice weekend and talk to you
Welcome.
next week. All
Okay.
right. Thank you, Fatima. Thank you very much. Thank you, Luis.
Thank you. Bye. Thank you very much.
Bye.
Bye-bye.